So it's been a very busy week for central banks around the world in terms of their monetary policy. But let's start with the US and Jerome Powell, the Federal Reserve Chairman. As we expected, how we've been saying, he went on pause or did a skip, whichever narrative you like to use. But it was a very hawkish statement that he made. And two factors came out of that. One was that he was saying that interest rates could actually rise further towards the end of the year, and that the other members of the Monetary Policy Committee didn't expect interest rates to start falling till 2024. So very, very hawkish. So it begs the question of, if you're so hawkish and kind of expect rates to move higher, why did you not do it at this monetary policy meeting? We think that the reason behind that is the concerns over the banking sector, because we see the collateral damage happen to the regional banks, and the worries is that could spread to the commercial real estate market as well. So on pause, and now the market's going to wonder what he's going to do next in terms of increasing rates, with the next possibility in the middle of July for rates to go higher. Now the market itself has kind of liked the fact that we've got growth. Unemployment, yes, is still stickier, but the market's saying, we like this because it's a Goldilocks scenario. Growth is there, inflation's slowly coming down, but we still expect the Fed to reduce rates. That's why we've seen the markets play out so well over the past month and a half. Now, will that continue? We think not in the very short term, because I think basically that as we move towards, kind of the summer months in the US, that some of these numbers will continue to be, kind of stickier than the market expects. Now, moving to Europe very quickly, the ECB increased rates by 25 basis points and said that July expect another 25 basis points. Very unusual to be increasing rates when Europe's heading very quickly towards recession. Germany is in technical recession already. So, these factors and the markets moving up don't play out for what the central banks are seeing and what the markets are expecting. So I think we've had a great run over the past month or so. I think the narrative of what we've been saying of the central banks looking to reduce rates by the end of the year, or at least go on pause, has played out. But now for the next few months, the worries might start to emerge again about whether interest rates will have to be tweaked higher, which would be a policy mistake in our view, because of the stickier inflation and higher unemployment levels.